Hi friends, welcome to our Tax TV channel. Diwali gifts. Know how much tax you need to pay on them. People are celebrating the auspicious day of Diwali today, October 24th. It is an occasion where people also exchange gifts. Employers give gifts to employees, sellers to customers, and friends to other friends, etc. However, the gifts do not come without tax implications. Though the gifts you get are not considered your direct income, they attract taxes under Section 56(2) of the Income Tax Act, 1961, unless they fall under the exempted category. Here are some rules related to taxes on gifts everyone should know.
Gifts from relatives. Any gift received from relatives is tax exempt if the relatives come under the definition of relative for this purpose under the Income Tax Act. For this purposes, relative means spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister of either of the parents of the individual, any lineal ascendant or descendant of the individual, any lineal ascendant or descendant of the spouse of the individual, and their spouses.
Gifts from friends. Gifts received from friends fall under the income from other sources. They are added to your income and tax is charged. However, the tax is levied when the value of the gifts crosses 50,000 rupees in a year. There is no tax on gifts worth less than 50,000 rupees a year. Importantly, gifts received on the occasion of the marriage of an individual are not charged to tax.
Gifts from employer. Gifts from the employer attract tax if they cross 5,000 rupees in a year. Gifts worth below 5,000 rupees in a year from employers do not attract tax. The gifts above 5,000 rupees are considered perquisites and taxed accordingly.
Movable and unmovable property is gift tax treatment. The difference between the consideration of the property, movable or unmovable, and the value of stamp duty will be considered a taxable gift if received for inadequate consideration. It has an exempt value of 50,000 rupees. So, if the difference is less than 50,000, the transfer will not be considered a taxable gift. According to the Income Tax Act, 1961, an unmovable property received without consideration by an individual or HUF will be charged to tax if the unmovable property, being land or building or both, is received by an individual or HUF, is a capital asset within the meaning of Section 2(14) for such an individual or HUF, and the stamp duty value of such a movable property received without consideration exceeds 50,000 rupees. Please subscribe.